Christian, thanks for being with us today. You're building a barbell. What specifically does this look like, and where do you see the greatest opportunities on a specific name basis?
Okay, well, thanks for having me here, Morgan. I'd say with a barbell, you've got to think about two opposite sides of a coin. It's really who's going to win when rates are higher and who's going to lose. And you want to have companies that can continue to perform in any market, but if we do have a big spike in interest rates because of Fed activity, you're going to want some regional banks. And a couple that we like, in addition to just the regional bank exposure in general, Webster Bank. This is an East Coast bank that just closed a big deal with Sterling out on the East Coast as well. But there's going to be some synergies from that deal. And more importantly to us is the health savings account bank that they have in the Midwest. This is the second or third largest health savings account bank in the country. And health savings accounts have a real chance at being as large, if not larger, than the 401k, which is, as you can imagine, done really well. So we like Webster. Another one, KeyBank. KeyBank is a great larger regional bank, but has a nice niche that we really appreciate. They cater to healthcare professionals with their Laurel Road division, and they have investment banking on the healthcare business as well, with 10% compounded growth rate in that business for long term.
Okay. So that's one part of the barbell. The other part, I think, is tech, which is interesting because we have seen tech and growth names get hit so hard in recent weeks and recent months. So where do you see the opportunities there?
Well, if you're going to pick individual stocks, you definitely have to pick amongst the tech companies because there are some really speculative ones there that are probably the ones you want to avoid. Generally, start with earnings. So what says big cap earnings better than Apple and Google? These are generating powerhouses, generate a lot of cash flow. Apple has done a fantastic job of seeding the market with its iPhone 5 or a 5G iPhone, I should say. And that isn't as much about the units to us as the software and services that are going to come behind it. They've talked about an electric vehicle. A lot of people say, hey, that's 5 years out. Why bother? This is one that they're definitely going to participate in. They don't have to make the car. It doesn't matter if they outsource that. They do that with the phones as well. But it's really an opportunity to broaden their software and services exposure.
Shepard Smith here. Thanks for watching CNBC on YouTube.